Hello everyone, so as you know, I like to talk about going against the crowd and looking for value where very few other people are looking. And if you examine the strategies used by some of the most successful investors out there, this is what they do, to a certain degree or another. They look at the facts as they appear to themselves, and they ignore for the most part what the crowd of investors is running after and bidding up to overvalued prices. And if anything, the crowd running away from something does attract the attention of these individuals. And the real beauty of this strategy is that you don't have to worry about timing or be very good with timing, and you don't have to devote very much time to it either. It's not like day trading, you have to watch it the whole time. Once you buy into these companies that you believe are undervalued, you simply hold on to them until they reach the price that you believe they should be valued at, or until your original thesis changes. So today I'm going to look into fossil fuels and examine whether or not they are poised to be the next big overlooked investment opportunity. So to get started, I want to make it clear that this is not about the potential moral issues behind fossil fuels or the potential advantages of lower emission energy sources. And I know that's kind of hard for some to overlook, and that's definitely okay. But if it's not possible to overlook this, that's totally fine. Yeah, there are definitely some industries I probably wouldn't invest in either just because of similar reasons. But this kind of starts us off well in that this has been one of the major downward pressures in terms of sentiment that has been on fossil fuels as a whole over the last several years, especially. They've been seen as a dying industry or an industry that needs to die according to some, or at least an industry that needs to be phased out. And regulations as a whole have become more stringent on the fossil fuel industry, and this in turn has caused many investors to overlook them completely. I mean, just ask yourself, when was the last time you saw anybody on CNBC or any of the market media talking about how compelling of an investment the fossil fuel industry is? I don't think I've ever heard of them talk about this. Instead they're looking at the next EV startup or EV charging company or solar company right now. So right now the crowd is really running after these recent startups and bidding them up to sky-high valuations, while they are overlooking these companies that they see as just some old dying dinosaurs. And while this might seem like a very strong reason to avoid the fossil fuel industry entirely, I see a very different reality right now. In fact, when I look at the macro factors of the industry and how they could play out in the coming years and how they are right now, as well as how undervalued some of these companies currently are, I smell a lot of opportunity there. So let's look into the macro factors out there right now. And I'll start with a very simple law of supply and demand. And as a lot of you are probably aware, the oil price depends on this to a very large extent, along with most other commodities. And especially with oil, this can send the price either sky high or, to zero or below zero. For example, during the shutdown that occurred last March, as well as the whole Russian and Saudi Arabian oil shock that took place, oil prices went negative very briefly. And this might seem impossible that oil producers were actually paying for the oil to be taken off their hands. But this is because of oil rigs and wells. They can't really turn on and off frequently, if ever. And in fact, when they are turned off, it is usually a permanent decision. So essentially, these oil producers were still receiving the same amount in supply, and they were unable to turn this down. They weren't able to really turn down the valves very much, if any, or to shut off wells. But demand had fallen by so much that the price actually went negative for a brief period of time. If you recall, all the airlines were down, travel was almost entirely shut down, so demand really plummeted, and demand changed very rapidly, but the supply did not change. And as of right now, late February of 2021, global demand is still down from its previous highs in early 2020. But looking at the supply side of the equation, supply has fallen even more. In fact, U.S. oil crude production is down some 30% from its previous highs, meaning that the events that took place in early 2020 and the low energy prices that resulted forced some of these energy producers to close down some of their operations. I mean, just think if you were an oil producer and you didn't have a large margin of failure last spring. That event that happened could have made you go bankrupt and cease operations entirely. So it's very important to realize how big of a shock that was last spring for oil producers. So this really explains the reason for why prices have risen so quickly, even from just a few months ago. The oil supply was cut down in the spring of last year and summer and could not respond quickly enough for the demand that increased late in 2020 and now in 2021. And here we get to a major opportunity that has also just happened, the cancellation of the Keystone XL pipeline. This pipeline would have transported oil to be refined from the Alberta area in Canada down to refineries in Texas. Now with this canceled, this will hurt these refineries as well as oil producers, but who will benefit from this? And the answer to this lies in, this further reduces the supply, and other oil producers, say in the Gulf of Mexico or other areas in Texas, will benefit very heavily from this as the supply side of the curve becomes even more tightened. There's also the notion out there right now that oil is a more risky place to invest in, given the new administration and further measures they might put in place, and this is true. But however, I will point out that even if they were to make it more difficult to get new permitting and putting new projects through, this could still mean that existing and established oil producers do well, as this wouldn't affect them significantly. But obviously this is still a large area for some people, as it could present more risk in an already risky investment area. But for other investors, they might look elsewhere because, of all the green energy that is supposed to be coming out and is coming, to a certain extent. But I would point out that while I also do think that other energy sources will eventually take away a significant portion of oil's portion of the pie right now, that is still a long time away in my opinion. I don't know how long in the future that is, but it's definitely not in the near future. It's not right now, and it's probably not in the coming few years. So as to how you might go about investing in oil or other fossil fuels, I'll leave that up to you. But I just made this video to put this on your radar. It's something I'm thinking about right now. Just the extreme supply and demand mismatch that is currently going on in the fossil fuel industry and with oil in particular, and how this could present the next big contrarian opportunity out there to be taken advantage of. So if you like these kinds of videos, just consider subscribing, and I hope to see you again.